Welcome to the 2020 Economic Recession Preparation Channel. Thank you for joining me on this holiday, Martin Luther King holiday, Monday, January 20th, 2020. Well, let's start with some positive news about our economy. Today, according to CNBC.com, U.S. manufacturing rises unexpectedly. U.S. manufacturing rose unexpectedly in December as a drop in motor vehicle output was outpaced by increases in production on other durable goods, food and beverages, and other products. Manufacturing production rose 0.2% last month after a downwardly revised 1.0% increase in November, the Federal Reserve said. But overall industrial output fell 0.3% in December. So we have that, some good news. We also have housing starts. U.S. housing starts soar 16.9% in December to a 13-year high, according to a survey published by Reuters.com. The data suggested that the housing market recovery was back on track amid low mortgage rates and could help support the longest economic expansion on record. This so-called economic expansion that we're experiencing, ladies and gentlemen, we're now entering the 12th year of economic expansion since the last downturn of 2008. Housing starts jumped 16.9% to an annual rate of 1.06 million units last month, the highest level since 2006. So we see that housing starts is surging. According to this article, in the month of December. And this, in my opinion, could be for two reasons. Number one, we're going to say that this is because the housing starts have been increasing. It's because of the end of the year. In 2019, you have to remember we had this influx of population increases in major hot cities. And what I mean by hot cities is those cities that people are moving away from high cost of living cities like in California and spilling into Arizona, Colorado, states like that, Texas, states where it was just the burden of taxes and costs was just a little bit lower. And Florida, of course, the snowbird. So that helped housing starts in the month. And secondly, because people were trying to get into new houses, getting started and ready to go to get that tax break benefit for the 2020 tax season, as you know, that's going on from now. January to mid-April, and so they can claim down their taxes too. And so that's good news. We're not here to preach all doom and gloom. I did say that there were some bright spots with the economy, but overall in 2020 the trend is downward, and because of the two things that no one is talking about is the earnings seasons were disappointing for fourth quarter, and GDP has dropped also for most of these companies, and 50% of the companies on Wall Street are not profitable. So that's one case thing that you have to look at too as well. And so if 50% of the companies are not profitable, that creates big problems for the economy. And with 70% of people being behind on their auto loans as well. Now, according to CNBC.com, they're saying that the pickup truck indicator shows, quote unquote, the economy is strong. According to research done by Data Trek Research, they found in 2009 that pickup truck sales is a helpful indicator since trucks are used in a vast array of businesses and, are typically a discretionary purchase. So they noted that 2019 sales for pickup trucks will reach 72 billion or 2.4 million units, which was 2.3% higher than the 2018's numbers, okay? So, according to that economic indicator, it would appear that business is booming in terms of auto sales of pickup trucks, and it shows little signs of growing. And these include Chevy Silverado, the Ford F-Series, the GMC Sierra, Dodge Ram, Toyota Tundra, Nissan Titan, etc. But what these numbers do not show is that how many of these new pickup truck sales were subprime loans given out. How many of these new pickup truck sales were inventory that was that these cars were damaged, either in flood damage, salvage title damage, or used car pickup sales truck. They never say that. That's never indicated in the statistics, okay? Because we do know that a lot of the new cars that you think are new are really damaged, have been flood damaged, and they've been shipped across the country and sold as new, and the odometers have been rolled back, and it's not showing on the title or the purchase of the car. And second of all, even if the person does get a new pickup truck, and as it suggested, the sales numbers were higher, that does not mean they have kept the pickup truck, meaning the monthly payments, because the monthly payments on these trucks are probably high. As you know, the average cost of these pickup trucks are in the $70,000. And you know that they're extending the loans now for 84 months, car loans, and you know the payments are still high on that because of that amount of money. So a lot of people are losing their vehicles, pickup trucks as well. And so we know those numbers can't be great overall when the auto industry has been struggling, as they're, obviously just more than 50% behind on the payments, 2 months behind on the car payments. So that is bad news. Now, the Fed will continue to pump money into the repo market. The Fed will continue to pump, that's the Federal Reserve, they will continue to pump money. And according to CNBC.com, the Fed could use negative interest rates if the U.S. recession strikes. They say if the U.S. recession strikes. In our minds, this is according to Goldman Sachs chief economist, okay? In our minds, we know that the recession will strike this year later on. And we know that a depression will come. Basically, 2021, the beginning of 2021 is going to be the year when everything goes to crap, because the negative interest rates are not going to save the banks. They're not going to bail out the consumer, because there's going to be, at the same time, we're going to have negative interest rates. We're going to have a credit freeze for consumers and businesses. Once the credit dries up, the lending dries up, the economy stalls to a halt, because you remember, we know that 3/4 of the U.S. economy is based on consumption and debt, okay? If people are not consuming and their too much debt load is too high, they can't consume, the economy seizes up in all of its forms, okay? So, negative interest rates is something in the future that's coming, okay? The ECB, the European Central Bank, and the Eurozone have tried that as well, to boost bank lending and to push it out the capital of businesses and all that kind of stuff, okay? To try to stimulate the economy. But this time around, it's not going to work, because the United States is in a considerably different position than those European countries and other places as well. And so it's not going to work, okay? The medicine is not going to work this time. Goldman Sachs is expecting the U.S. economy to grow above 2.2% this year. I doubt that. We're looking at a 1% growth rate GDP this year, according to my forecast. And that's why in 2021 we're going to be at zero, and that's when everything is just going to go downhill. Whoever the next president is, whoever the next Congress is, they're going to inherit a mess for the next 4 years. And it's just going to be a stalemate. The economy is just going to be in a big stagflation situation in 2021, and that's going to lead us to a recession that they're going to have to finally declare, and then on the media and the mainstream, and then we're going to go into the depression later on, because this is going to be like a 5 to 8 year event that we're looking at right now, to get things reset and to get things back to sound money, whatever that may look like in the future. Okay, guys, so continue to get prepared, continue to stack food, water, seeds, continue to think about how you're going to mitigate your debt and take care of your families and your friends and your loved ones, and just don't be surprised at what's going to happen. This is going to be the year. 2020 is a transition year. The central bank forecasts the growth rate of 2% for 2020, slightly lower from the growth levels seen in 2019. So they're slowly easing us into this thing. They're slowly easing the public and the mainstream media, and to get ready for a slowdown in growth in terms of earnings, in terms of lending. They're slowly breaking it into a system now. But we know that once they pull the plug, this thing is just going to go downhill fast. Won't quite be a Venezuela type event, but a black swan event, as you know, can happen to anything, and it can really turn things really ugly. It can get really ugly really fast when these numbers are revised downward and downward. So continue to be prepared, my friends. Have a safe and great week as we're just starting out here. For those of you on the holiday, schools out and workers out, enjoy. For those of you not, like I said, we're just starting the week. So and I'll be in touch soon. Thank you very much for listening, and have a great day.